Listen to me very carefully. What I'm about to tell you is going to sound extreme, but I need you to understand something right now. Silver is about to do something it hasn't done in 40 years. And if you're not positioned correctly, you're going to watch one of the greatest wealth transfers in modern history happen right in front of you while you sit on the sidelines with your thumb up your rear end. This isn't speculation, this is cold, hard data, and the clock is ticking. I'm Kevin O'Leary, Mr. Wonderful. I built companies from nothing and sold them for hundreds of millions of dollars. I've seen commodity cycles that crushed unprepared investors and made disciplined ones wealthy beyond their wildest dreams. I've invested in precious metals. I've studied every major bull market in modern history. And what I'm seeing right now in the silver market is setting up to be one of the most explosive opportunities of this decade. Now, let me set the stage for you. Most people think silver is just gold's ugly little cousin. They think it's boring. They think it's outdated. That's garbage. That's what broke people tell themselves because they don't understand markets. They don't understand supply and demand. They don't understand what happens when you have a physical commodity that the entire world needs and there's not enough of it to go around. Here's what's happening right now that nobody is talking about. Global silver demand hit 1.2 billion ounces in 2024. Production, 830 million ounces. You do the math, that's a deficit of 370 million ounces. That's not a small gap. That's a chasm, and it's getting worse every single year. But here's where it gets really interesting. This isn't just about jewelry or silverware or some collector buying coins for their basement. 56% of silver demand right now is industrial, solar panels, electric vehicles, 5G infrastructure, electronics, medical devices. Every single trend that governments around the world are pushing requires silver. The green energy transition that politicians won't shut up about, it's a silver consumption machine. Let me paint you a picture. A single solar panel uses approximately 20 grams of silver. The International Energy Agency projects that solar capacity will triple by 2030. Triple. That's 220 million ounces of silver per year just for solar panels alone. Where's that silver going to come from? Thin air? And it's not just solar. Electric vehicles use twice as much silver as traditional cars. Every EV needs silver for circuit boards, charging stations, battery management systems. Global EV sales hit 14 million units in 2024. By 2030, that number is projected to hit 45 million. You're looking at exponential demand growth for a commodity that's already in deficit. This is the setup. This is the tension. We have governments mandating technologies that require massive amounts of silver. We have industries that cannot function without it, and we have supply that can't keep up. Something has to give, and when it does, the price is going to explode. Now, I'm going to tell you exactly why silver is about to surge like never before. There are three massive forces converging right now that are creating a perfect storm. And if you understand these three forces, you'll understand why smart investors are accumulating silver right now while it's still cheap. Let's start with something that should terrify you. Central banks around the world added 1,037 metric tons of gold to their reserves in 2024. That's the second highest annual total ever recorded. China alone added 225 tons. Russia, India, Turkey, Poland, they're all stockpiling gold. Why? Because they don't trust the dollar anymore. They don't trust fiat currency. They want hard assets. Central bank gold purchases hit 1,037 metric tons in 2024. Now, here's what nobody is paying attention to. When central banks buy gold, they create a spillover effect into silver. The gold-silver ratio, the number of ounces of silver it takes to buy 1 ounce of gold, has been hovering around 85 to 1. Historically, that ratio has been 15 to 1. Let me say that again, 15 to 1. Right now, silver is so undervalued relative to gold that it's not even funny. When central banks drive gold prices higher, silver follows. But it doesn't just follow, it amplifies. In the 2008 financial crisis, gold went up 165% from bottom to peak. Silver went up 440%. In the 1970s inflation crisis, gold went up 2,300%. Silver went up 3,100%. Silver is gold on steroids, but it's not just central banks. Sovereign wealth funds are diversifying into precious metals. Pension funds are adding commodity exposure. Even billionaires like Ray Dalio and Paul Tudor Jones have been vocal about holding gold and silver as inflation hedges. When the smart money moves, you better pay attention. Here's the bottom line on Force 1. When the world's most powerful financial institutions are dumping dollars and buying hard assets, they're telling you something. They're telling you that the currency system is broken. They're telling you that inflation is not going away. And they're telling you that precious metals are the only real store of value. Silver is part of that equation. Now let's talk about force two. This is where the real panic is going to set in for industrial users. I mentioned the supply deficit earlier, 370 million ounces. But let me break down for you exactly where this demand is coming from and why it's not going to stop. Solar panels require silver because it's the most conductive metal on Earth. There is no substitute that works as efficiently. None. Scientists have tried copper, they've tried aluminum, they've tried everything. Silver is irreplaceable, and solar capacity is mandated by governments worldwide. The European Union has mandated that 45% of energy must come from renewables by 2030. China is building solar farms the size of cities. The United States Inflation Reduction Act is pumping hundreds of billions into green energy. Solar silver demand projected to reach 220 million ounces annually by 2030. Electric vehicles are the same story. You need silver for the electrical systems. You need it for the charging infrastructure. Every single charging station contains silver components. There are 2.7 million public EV charging stations worldwide right now. That number needs to hit 40 million by 2030 to meet demand. That's 15 times more charging stations. Each one requires silver. But here's the real problem. Mining companies aren't responding to this demand. Why? Because 72% of silver production is a byproduct of other mining operations: copper mines, lead mines, zinc mines. When companies mine for copper, they get silver as a bonus. But they're not mining for silver specifically because the price hasn't been high enough to justify opening new pure silver mines. 72% of silver is mined as a byproduct. Building a new mine takes 7 to 10 years. Environmental permits, infrastructure development, capital investment. It's not like flipping a switch. So even if silver prices double tomorrow, we won't see new supply hit the market until the 2030s. The supply deficit is locked in for the rest of this decade, and it gets worse. Above-ground silver inventories are at their lowest levels in decades. The COMEX silver inventory dropped from 350 million ounces in 2020 to 280 million ounces in 2024. That's a 20% decline in stored silver. Industrial users are drawing down stockpiles. There's no cushion left. Now imagine what happens when one major industrial buyer, let's say a solar panel manufacturer or an EV company, suddenly realizes they can't get enough silver to meet production targets. They start panic buying, they start hoarding, they drive the price up. Then every other industrial user starts doing the same thing. That's when you get a squeeze. That's when prices go parabolic. I've seen this movie before. I saw it with rare earth metals when China restricted exports. I saw it with lumber during the pandemic. When you have genuine supply shortages in commodities that industry needs to survive, prices don't just go up, they skyrocket, and silver is setting up for exactly that scenario. Now let's talk about force three. This is the big one. This is the force that's going to wake up retail investors and send them flooding into precious metals like it's 1980 all over again. Inflation is not transitory. That was a lie. The Federal Reserve printed $5 trillion during the pandemic. The government debt is now $36 trillion. That's 120% of GDP. We're adding $1 trillion in debt every 100 days. Every 100 days. That is not sustainable. U.S. government debt is $36 trillion, 120% of GDP. Interest payments on the national debt are now consuming over $1 trillion per year. That's more than we spend on defense. It's more than we spend on Medicare. We are in a debt death spiral, and there are only two ways out: default or inflate. The government will never default, so they're going to inflate. They're going to print more money. They're going to devalue the dollar, and when they do, hard assets like silver are going to protect you. Let me give you some historical context. In 1970, an ounce of silver cost $1.50. Today, it's trading around $28. That's an 1,800% return. But here's the thing. Adjusted for inflation, silver would need to be at $65 per ounce just to match its 1980 peak. We're not even close to the inflation-adjusted highs. Silver is still historically cheap. Inflation-adjusted silver peak would be 65 Aussie today. But let's talk about what real inflation looks like. Not the CPI garbage the government publishes, real inflation. Housing costs are up 40% since 2020. Grocery prices are up 25%. Energy costs are up 30%. Insurance premiums are up 50%. The cost of living for the average American family has exploded, and it's not stopping. When people realize their savings are being destroyed by inflation, they look for alternatives. They look for stores of value. In the 1970s, when inflation hit 15%, gold and silver went ballistic. People were lining up around the block to buy coins. Premiums on physical silver hit 70% over spot price because demand was so insane that dealers couldn't keep inventory. That's coming again. When the next wave of inflation panic hits, when people see their purchasing power evaporating, they're going to flood into precious metals. And because the silver market is so much smaller than gold, only $60 billion compared to gold's $13 trillion, even a small amount of retail buying pressure is going to send silver prices into the stratosphere. Here's what people don't understand. The silver market is tiny. Total above-ground silver inventory is worth maybe $70 billion. That's less than the market cap of Netflix. If just 1% of global investors decided to put 5% of their portfolio into physical silver, it would overwhelm the entire market. There's not enough silver to meet that demand. Prices would have to rise until demand is destroyed. We could easily see silver at $50, $75, even $100 per ounce. Total silver market is 60 balas versus gold's 13T. Now, I want you to think about this carefully. You have central banks buying physical metals. You have industrial demand exploding with no supply response, and you have inflation destroying currency value. Those three forces are converging right now at the same time. This isn't one catalyst. This is three catalysts hitting simultaneously. That's why I'm telling you this is going to be unlike anything we've seen before. Now, let me reinforce why these three forces are so powerful and why you need to understand the deeper implications of what's happening. Let's go back to central banks for a moment. When China adds 225 tons of gold to their reserves in a single year, that's not random. That's strategy. China is trying to internationalize the yuan. They want to challenge dollar dominance. And you can't do that with a currency backed by nothing. You need hard assets. You need credibility. The BRICS nations, Brazil, Russia, India, China, South Africa, they're all moving away from the dollar. They're settling trade in local currencies. They're building alternative payment systems, and they're backing their currencies with commodities and precious metals. This is a tectonic shift in the global financial system. When I was building my education software company in the 1990s, we had this one client who kept demanding features that made no sense for the product. My team loved the client because they were prestigious. But when I looked at the numbers, I realized this client was costing us more money than they were worth. I cut them loose. Everyone thought I was crazy, but within 6 months, we were more profitable because we stopped wasting resources on something that didn't work. That's what central banks are doing with the dollar. They're looking at the numbers. They're seeing a currency that's lost 97% of its purchasing power since 1913. They're seeing a government that can't stop spending. And they're cutting loose, they're diversifying, and when central banks diversify, they buy gold and silver. Now let's talk more about the industrial side. You might be thinking, Kevin, what if they find a substitute for silver? Let me be very clear. They've been trying for decades. Silver has the highest electrical conductivity of any metal. It has the highest thermal conductivity. It's antimicrobial, it's reflective, it's durable. There is no single material that can replace silver in all its applications. Sure, in some applications they can use alternatives, but those alternatives are either less efficient or more expensive. A solar panel with copper instead of silver is less efficient. That means you need more panels to generate the same electricity. That means more land, more materials, more cost. At a certain point, it's cheaper to just pay more for silver than to redesign entire systems around inferior alternatives. And here's something most people don't know. Silver is consumed in industrial applications. Unlike gold, which gets recycled at a 90% rate, silver gets embedded in tiny amounts in thousands of different products and never gets recovered. Every cell phone has about 1/4 of a gram of silver. When you throw away your phone, that silver is gone forever. It's not economically viable to extract it. Silver industrial recycling rate is only 30% versus gold's 90%. Think about that. We're mining silver out of the ground, using it in products, and then throwing it away. The above-ground stockpile of silver is actually shrinking while demand is growing. That is the definition of a supply crunch waiting to happen. Let me give you another example from my own experience. When I invested in a wine business years ago, everyone told me the market was saturated. There were thousands of wineries. But I looked at the data. I looked at where demand was growing. High-end wines were scarce. People were willing to pay premium prices for quality. We positioned our wines in that segment and made a fortune. The lesson? When supply is constrained and demand is growing, prices have to rise. That's economics 101. That's exactly what's happening with silver. Supply is constrained, demand is growing, prices have to rise. The only question is when and how much. Now let's talk about inflation and what it means for you personally. I don't care if the government tells you inflation is 3%. That's a lie. Your real inflation rate is whatever your personal costs are going up by. If your rent went up 20%, your inflation rate is 20%. If your groceries went up 30%, your inflation rate is 30%. The government uses a rigged formula called CPI that underweights housing and food and energy. They do this to keep Social Security payments low and to make the economy look better than it is. But you're not stupid. You know what things cost. You see your bank account. You know you can't buy as much stuff as you could 5 years ago. When your savings lose purchasing power, you have two choices. You can sit there and watch your wealth evaporate, or you can protect yourself with assets that hold value. Real estate is one option, but it's expensive and illiquid. Stocks are another option, but they're in a bubble. Bonds? Forget it. With inflation running hot, bonds are a disaster. That leaves commodities, oil, copper, agricultural products, and precious metals. Gold and silver are the only financial assets that have held value for thousands of years. Every fiat currency in history has eventually gone to zero, every single one. The dollar won't be any different. It's just a question of time frame. I moved my personal residence out of high-tax states years ago because I got tired of writing massive checks to governments that wasted my money. That's a form of capital preservation. Owning silver is the same thing. You're taking wealth out of a system that's designed to devalue it and putting it into something that can't be printed, something that's real, something that's scarce. Let me tell you about the 1970s because most people watching this weren't alive or don't remember. Inflation hit 15% in 1980. Gas lines around the block. Interest rates hit 21%. The stock market went nowhere for a decade, but if you owned gold and silver, you got rich. Silver went from $1.50 to $50 in 10 years. That's a 3,300% return. Silver rose from 150 to 50, 1970, 1980 during inflation crisis. People who sat in cash or bonds got destroyed. People who owned hard assets protected their wealth and then some. History is about to repeat itself. We're in the early stages of another inflation cycle. Government debt is unsustainable. Deficits are out of control, and silver is positioned to benefit massively. But here's the thing. You can't wait. You can't wait until silver is at $50 and then decide to buy. By then, it's too late. By then, everyone knows the story. By then, you're buying at the top from smart investors who bought early and are now selling to you. Smart investors accumulate when nobody is paying attention. They buy when assets are cheap and unloved. They don't chase momentum. They don't panic buy. They build positions slowly, methodically, based on cold, hard data. That's discipline. That's how wealth is built. Right now, silver is unloved. It's boring. Financial media isn't talking about it. Hedge funds aren't piling in. That's exactly when you should be accumulating. When everyone is chasing AI stocks and crypto and meme stocks, that's when you quietly build your silver position. And when inflation panic hits and everyone is scrambling to protect their wealth, you'll already be positioned. Let me make something very clear. I'm not telling you to put your entire net worth into silver. That would be reckless. I'm telling you that 5 to 10% of your portfolio should be in precious metals as a hedge, as insurance, as protection against the inevitable currency debasement that's coming. You don't buy insurance after your house burns down. You buy it before. Silver is your financial insurance policy, and right now, the premiums are cheap. Let me bring this all together for you. We've covered three massive forces that are converging to create an unprecedented surge in silver prices. Force one, central banks are hoarding physical metals because they don't trust fiat currencies anymore. When the world's most powerful financial institutions are dumping dollars and buying gold, the spillover effect into silver is enormous. The gold-silver ratio tells you silver is dramatically undervalued right now. Force 2, industrial demand is exploding with no supply response. Solar panels, electric vehicles, 5G infrastructure, every major technology trend requires silver. We have a 370 million ounce supply deficit that's getting worse every year. Above ground inventories are at historic lows. There's no cushion left. When industrial buyers start panic buying, prices will skyrocket. Force 3, inflation and currency debasement are accelerating. The government has printed trillions of dollars. Debt is out of control. Real inflation is destroying purchasing power. When the next wave of inflation panic hits, retail investors will flood into precious metals. The silver market is tiny. It can't absorb that demand without massive price increases. These aren't my opinions. This is data. This is supply and demand. This is basic economics, and the numbers don't lie. Now, here's what you need to do. You need to build a position in silver, not all at once, not in a panic, methodically, dollar cost average over the next 6 to 12 months. Allocate 5 to 10% of your portfolio. Buy physical silver if you can store it safely. Buy silver ETFs if you want liquidity. Buy silver mining stocks if you want leverage to the price move. But do something. Don't sit on the sidelines and watch this opportunity pass you by. Don't be one of those people who says, I knew I should have bought silver when Kevin O'Leary was warning about it back in 2025. The time to act is now. The setup is in place. The catalysts are converging. This is your chance to protect your wealth and potentially make life-changing returns. But you have to be disciplined. You have to ignore the noise. You have to focus on the data. This is about your financial future. This is about protecting your retirement. This is about making sure you're not eating cat food in your golden years because you ignored the warning signs and did nothing. Stay smart. Stay disciplined. And remember, the market doesn't care about your feelings. But if you position yourself correctly based on cold, hard data, you will thrive. Now, I need you to do a few things for me before you click away from this video. First, smash that like button if you found this valuable. This information could literally save your financial future. Show me that you're paying attention. Show me that you understand the gravity of what I just explained to you. Second, share this video with your friends and family. They need to hear this message. Most people have no idea what's coming. They're sleepwalking into a financial disaster. You can help them by sharing this information. Send them this link. Tell them Kevin O'Leary explained why silver is about to surge and they need to watch it immediately. Third, leave a comment. Tell me what you think. Tell me if you're already positioned in silver or if this video convinced you to start building a position. Tell me what you're seeing in precious metals markets. I read the comments. I want to know what's on your mind. This is a community. We learn from each other. Fourth, if you haven't already, subscribe to this channel. Hit that subscribe button and turn on notifications. I release videos regularly about protecting your wealth, identifying opportunities, and avoiding financial disasters. The information I share here is worth thousands of dollars in bad decisions avoided. Subscribe right now. Fifth, consider becoming a member of this channel for exclusive content. Members get access to deeper analysis, portfolio strategies, and direct Q&A sessions where I answer your specific questions about investing and wealth building. Click the join button below this video to learn more. We're building a community of serious investors who understand that wealth is built slowly, methodically, with discipline and patience. We're not chasing get-rich-quick schemes. We're not gambling on meme stocks. We're making data-driven decisions based on fundamentals and sound economic principles. When I look at the members of this community, I see people who get it. I see people who understand that protecting wealth is just as important as making it. I see people who are willing to do the work, study the data, and make smart decisions even when it's not popular or exciting. That's who I want in this community. People who are serious, people who are disciplined, people who understand that the market rewards patience and punishes emotion. If that's you, then join us. Subscribe, engage, learn, build your wealth the right way. And remember what I told you today. Silver is about to surge like never before. 3 massive forces are converging. Central banks are hoarding metals, industrial demand is exploding, inflation is destroying currency value, the setup is perfect, the timing is now. Don't wait until silver is at $75 and everyone is talking about it. Don't be the person who buys at the top and rides it back down. Be the smart investor who buys now when it's cheap, who builds a position methodically, who protects their wealth before disaster strikes. You have the information, you have the data, you understand the three forces. Now you need to execute, build that position, protect your retirement, secure your financial future. Stay smart, stay disciplined. And remember, cash is trash in an inflationary environment, but hard assets like silver will preserve and grow your wealth for decades to come. I'll see you in the next video where we'll talk about exactly how to buy silver, which forms are best, and how to store it safely. Until then, protect your wealth and live the life you deserve.